Hello everybody, I'm James Leichter from Aptora. I want to thank you for being here in our monthly webinar. We are going to be talking about job costing today. We have a lot to cover, so I'm going to dig right in. Feel free to ask your questions and my teammates will feed those over to me and I'll answer them the best I can. And anything that's complicated, I can always do it at the end during a Q&A. I've got plenty of time. We're going to go about 1 hour. Usually I'm late. I'm going to try my best to go 1 hour, and then I'll stop and take all the time you want for a Q&A. Okay, let's first cover some basic job costing concepts. I've got Microsoft Word open here, and I typed up some notes for the webinar today. I didn't have these proofread. I hope there's no typos in here. Few job costing terms that I want to make sure we're clear on. First of all, what is job costing? Job costing is a lot less than a lot of people think it is. Job costing really is just knowing how much it costs to do the job. That's really about it. Now, in addition to that, we typically have a report that shows us all the money that we charge for the job and all the money that we spent on that job, and whatever is left over is gross profit dollars. A good job costing report will give us a lot more information than that, of course. One nice thing to have is the jobs allocation of your company's overhead. Every job should pay part of your company's overhead. You have two types of overhead, variable overhead and fixed overhead. The job is naturally going to be charged for some of that variable overhead, but there should be something left over, which we call contribution margin, contribution dollars. That's the money that you use to cover some of your company's fixed costs. I'll get more into that in a moment. Important formula here. Billed and collected money to date minus the cost to complete the job equals anticipated cash flow. We're going to talk more about these formulas in a moment, but it's really important if you do a lot of jobs, especially big ones that require a lot of cash outlay, especially when you're waiting for your money. It's really important to understand how much of that job you have left to bill for and how much it's going to cost you to finish that job. Revenue. The term revenue is often used interchangeably with the term sales. They mean different things to nerdy accounting people, so technically we should use them differently, but we typically don't. I don't. I typically say sales, revenue, and they do mean slightly different things, but for the most part, when we say sales, we mean revenue. Cost of goods sold is all the money that you spent to do that job. It doesn't include your company's overhead like rent or insurance. It is the cost to buy the things, parts, materials, equipment, labor, to buy the things that it took you to do that work. And whatever's left over is, of course, gross profit, as I said earlier. Now think in terms of, when you think about gross profit, think in terms of gross profit dollars, not gross profit percent, because we use dollars to pay our bills. And I'm not trying to be funny by that. I mean, we spend, I think, too much time focusing on what is the gross margin on a job when we should be thinking about what was the gross dollars received on the job. And here's why. You could have a job that had a very poor, quote unquote, gross profit margin, but it was a very profitable job because there were a lot of gross profit dollars. By the same token, you could have a gross profit margin of 90% on a $1 job, and that would only leave you 10 cents. Now, I realize you're not doing a $1 job, but I was making the math easy. It could be a great profit margin, but there's not a lot of dollars, and that would be bad. So be careful thinking about gross profit percent. Lost my signal to my monitor, didn't I? Well, there we go. Got a loose wire somewhere, I think, on that. Overhead. Overhead is everything else. Overhead is just what you think it is. It's things like rent and salaries for your office people and marketing and internet and insurance other than work comp. I would consider work comp insurance a direct expense, office supplies and so forth. Gross profit minus overhead If there's anything left over, that's your net profit before taxes. Some other inventory-related terms I wanted to cover real quick is materials. Materials would be things such as duct, pipe, wire, sheet metal, disconnect switch, pad for the unit, things like that. Supplies are typically combined. Many companies combine supplies and materials into one group, and that's fine. But supplies would be simpler things, consumables you might call them, such as pipe dope and electrical tape and wire nuts and fasteners and things like that. So those would be supplies, adhesive, caulk. Inventory. Now, sometimes when I'm coaching with a company, I'll say something like, do you track inventory, or do you track that item in inventory? Or I'll use the term an inventory item. And sometimes the person will say to me, well, wait, we don't keep that in inventory. But to a nerdy accountant, everything is inventory, whether you keep it in stock or not. When you buy something other than labor, when you buy something other than a service, tangible, when you buy something tangible, even if you bought it just for that job, we would still call that inventory. That term inventory is for whether or not we would, I have a bad connection here again, we would call it inventory no matter what. Inventory parts versus equipment. So parts would be things like a contactor, a relay, a motor, things like that. Equipment is typically serialized equipment that you're used to, a furnace, an air handler, evaporator coil, rooftop unit, things like that. A non-stock inventory item is an inventory item that you don't stock. Well, why would you call it inventory if you don't stock it? Again, it's that term that sometimes confuses people. Even though we call it an inventory item, it doesn't necessarily mean that we plan to keep it in inventory. We simply bought it to immediately use it on a job. In that case, it wouldn't be called an inventory part, which we would normally stock. It would be called a non-inventory part. You might remember in Total Office Manager, you have a non-inventory item, you have an inventory part, you have serialized. That's why we have those types. Keep in mind, when it comes to job costing, you only sell two things. Every company out there sells just two things, and that's labor and meso. I'll talk more about meso in a minute, but the good news is you're only tracking two things, labor and everything else. If you can track those two things effectively, then you have good job costing. Direct expenses versus costs of goods sold. I wanted to put this one to sleep. They're really the same thing. When someone says cost of goods sold or they say direct expenses, they are referring to the same thing, the money that you spent on things that were needed to do the job. Indirect expenses is the counter to the direct expenses. Indirect expenses are things like your overhead, your rent, salaries for the office people, etc. So knowing some of these terms is helpful as we move forward today and talk about job costing. Quickly on overhead, sometimes that's called G&A or general and administrative expenses. Most of us just say overhead. When you look at your income statement, if it's from Total Office Manager or any of the major accounting packages like a QuickBooks, then you're probably going to see income at the top, which represents income, revenue, sales. You're going to see cost of goods sold, and then you're probably going to see the term overhead. That's usually how the reports are laid out. A couple other things I wanted to mention here before we get into software-specific conversations. Labor is your most valuable thing. It is the most important thing to track in your company. When you look at a job costing report and the job didn't go well, it is almost never because you estimated the equipment incorrectly. It's almost never, to a significant degree, that you got the parts and materials and supplies incorrect. It's almost always labor. If we're going to get something wrong to a significant extent, it's going to be labor. So labor is the most important thing for you to track when it comes to job costing. Also, labor carries the most overhead. The reason why your company has vans and trucks and buys gasoline and pays for insurance is because of the people that drive them. Everything in your company is driven by the field when it comes to overhead, I should say. All of the overhead in your company is driven by activities in the field. The only reason why you have a computer is to dispatch the field. The reason why you have a printer is the same thing. Everything in your office is to support the field. So the more we spend on field labor, direct labor, the more overhead we have. So overhead is driven by direct labor. For that reason, I recommend that you focus your attention on tracking labor expense to the highest degree possible. And once you have that mastered, then you can move on to tracking equipment, parts and materials, etc. You can get decent job costing without full inventory tracking, but you won't get excellent job costing without tracking inventory. You need to be able to track inventory coming in and out of your company. You should know how many things you have on each of your trucks, or at least how many things your company has at any given moment, or you won't have good job costing, because all of the non-labor things will be off to the degree that your inventory counts are off. So I always recommend that you prioritize labor tracking. But the good news is that's pretty easy. You really just have to do two things. There needs to be a work order for every job, every billable task. Even if it's non-billable, you need a work order. So let's say you're going out on a callback, you need a work order. Let's say you're going out on a warranty call, you need a work order. You don't need a work order for a sales call because that would have never been billable. Normal billable activities, whether you're going to charge for it or not, should always have a work order. Think about the term work order, and if you know me, you've heard all this, right? Think about the term work order. It's an order to do work. It's a permission slip for you, the technician, to go out and do work. Without a permission slip, you don't get to go out and do work. You have to have a permission slip. And those of you who pay the bills, you might be thinking that sounds a lot like a purchase order. It is. The counterpart to the work order is the purchase order. The purchase order is on the AP side, and the work order is on the AR side, accounts payable, accounts receivable. So purchase orders are on the purchasing side. Work orders are on the working side, call it. But they have the same purpose. They are a permission slip to spend company money. The good thing about that work order, though, is that's your ticket to great job costing. The work order should have everything you need for accurate job costing because everything flows from the work order. So a work order for every task and a timesheet for every work order. It's important that your technicians are clocking in and out on every job as accurately as your company can find possible. That's really the key. That takes a little bit of getting used to, a little bit of discipline, but I find talking to my clients, customers, that they have no trouble mastering that. So it's timesheets for everything. You get that mastered, then it's just a matter of using the app properly for clocking in, clocking out, and creating your work orders and so forth. Then you're ready to worry about priority number two. Priority number two is to track serialized equipment. By the way, I don't know if you saw that on the screen. I put a little cat icon right there. Did you guys notice that, my cat icon?
I did, yeah.
Yeah, I wrote that cat icon has nothing to do with any of this. I just like cats. So I wondered if anybody noticed that. Second priority is tracking serialized equipment. Now that's easy too because serialized equipment has a serial number and it's typically a pretty big box. I'm talking about things like evaporator coils, air handlers, furnaces, rooftop units, condensing units, heat pumps, things like that. Some small items such as thermostats are starting to come with serial numbers, pumps. Some expensive components have serial numbers. But what I'm really referring to is a big box with a serial number on it, equipment. It's easy because when you create a purchase order, you don't have to worry about the serial number at that moment. It's when you receive the item. And when you receive that item, you're typically receiving a packing slip that has a serial number. If it doesn't, the box has typically stickers on it that you can peel off. They were made for that. You peel them off and put them on the packing slip or other paperwork. So it's pretty easy to get this serial number to that piece of equipment. When you create a purchase order for a piece of serialized equipment, you're selecting the model number. So you have one model number for a furnace. We'll call it a gas furnace. You would just have one model number for that gas furnace. You don't put that item in over and over again for each serial number. You just put it in once for that model number and you're done. When you receive the item, you're picking that model number and the software is going to ask you to enter the serial number. You can use a barcode scanner to make it easier on you, but the hardest part is just putting in the serial number, getting that number in, getting it right. And I say the hardest part, it isn't hard, but that is the hardest part of it. That's all. When you sell it, when you create your invoice, you're picking that serial number. Chances are you already know what it is, especially if you're using the item reservation feature, which we'll talk about, but you will easily be able to pick that serial number. Now, the reason why this is great is because if labor tracking, the expense of labor is, say, 95% accurate, and you have the equipment selection 100% accurate, and you should, then you've already got pretty darn good job costing. You know exactly how much the labor cost, and when it comes to the serialized piece of equipment, the software knows exactly how much you paid for it. There's no averaging or first in, first out, none of that. It knows exactly what you paid for that unit, and that's what goes to the job costing report for that particular job. We're also going to get into the software and look at some of the reports, but I wanted to remind you that there are a lot of job costing reports. Just look for a report that starts with the word job, and that is probably related to job costing in some way. Any report that allows you to select a customer or a job could be useful for job costing reporting purposes. It may not be your go-to standard report, but remember, many reports, if not most, have a job selector where you can select the customer and or the job, and it could be useful. The go-to reports are typically the job costing overview report and the job estimate versus actual summary or detailed reports, which we'll get into. And there are also some custom data views that we'll look at as well. All right, but before I go too much further, I have a little reminder up here. Lift my browser up so I wouldn't forget. I'm surprised that not more people know about our release notes. So when we put out a software update, we put out release notes. I was talking to somebody recently who was dismayed, I'll call it, that we aren't paying any attention to Total Office Manager. He said that we seem to be focused on our new program production and we're not paying attention to the old program. Well, I'm in the old but beautiful program all the time, and we are paying attention to it. Here are the release notes from our last release, and you'll notice they're pretty extensive. You'll see that we've added a lot of features, made a lot of enhancements. We fixed various bugs. So up here at the top, we list every enhancement we make. Below that, we put in our bug fixes. We're very open about bug fixes. Have you noticed that most software companies just put in various bug fixes or bug fixes and stability improvements, something like that? Well, I think they're hiding from you the fact that they fixed a lot of bugs. Well, software companies fix a lot of bugs. That's the reality of it. Windows certainly puts out updates at least every 2 weeks, fixing hundreds of bugs. It just happens. So we're very transparent about it. If you have a ticket in and you didn't know otherwise that your support ticket was handled, then you might see the ticket number in here. Now that would be, I should be clear, that would be a ticket where you've identified a bug. So your ticket was a bug. You'd see your ticket number in here and you'd know that that was taken care of. And then below that, we have our so-called yellow screen error submissions, which we explain what that means. But if you've ever used the software and had a form pop up with a yellow background, that is our yellow screen. That's what we call it. And that means that you ran into an error that our software never anticipated. And if you hit the submit button, then we fix those. We look at those submissions, we try to figure out what it was, we fix them, and you can see there were 29 of them fixed. So we're very open about the work we're doing, and then you can go look at the release notes before that and see everything that we're up to. All right, let's get into Total Office Manager and talk about job costing. As I said earlier, job costing isn't really as much as a lot of people think it is. I've had owners, for example, approach me and say, we haven't been able to get a decent job costing report out of your software since we bought it. Now, what that means is, unless there was some bug with the report they're looking at, which is always possible, but there hasn't been anything reported in many years on the job costing reports, but it's always possible. But unless it was a bug, it really means, no offense, it just means inadequate bookkeeping. The bookkeeping's not adequate to support job costing. It might be adequate enough for that particular company, but when it comes to job costing, it's not adequate. Again, think about job costing. It's all about how much did the job cost? Well, what went into the job? Labor and meso. What's that darn meso thing stand for? It's materials, equipment, subcontractors, and other direct expenses, like pulling a permit. So it's basically everything except direct labor. So we're tracking labor and meso. And your job costing report is going to be just as good as your ability to tell me how much you spent on labor and meso just for that job. And it's going to be just as bad as your ability to tell someone how much you spent on labor and meso just for that job. Well, how would you ever know? Good bookkeeping. What is bookkeeping and how is it different than accounting? Well, bookkeeping is basically creating all of the forms and the paperwork that your company uses and deciding what fields are going to go on an invoice and so forth. It's the process of developing those forms, getting people to fill them out properly, collecting those forms, taking data from those forms and entering it into software, in this case, but in the old days it was entering it into ledger books. You put all that data into books, and that was called keeping the books. The accountant came along and took all those books and created reports. Income statement, balance sheet, cash flow, job costing. So job costing really is all about bookkeeping. And the better your bookkeeping, the better your job costing. If you're not exactly sure how much parts and materials went into any particular service call or installation, then your job costing suffers. It may not matter to you. That may be fine. You're aware of that, and that's good. But sometimes people will say to me, the job costing report is not correct. Why? When are you going to fix this? Well, the way to fix it is to go through the bookkeeping system and make sure that we're doing the things we need to do to have good job costing. As I said earlier, there are two keys. Always use purchase orders. Always use work orders. And along with a work order, always enter a timesheet. And pretty much everything else will take care of itself. Let's talk about how to set up a job. Some of these things, there's a right way and a wrong way, and it's black and white. And some of these things, it's not so black and white. And so I'm going to give you, in many cases, my own opinion on things. And it doesn't matter. It doesn't mean that I'm right and you're wrong or that there's not a better way. So just keep that in mind. Sometimes it's like science. It's a matter of fact. 2 plus 2 is always 4, no matter what. But many things aren't that clear-cut. So please keep that in mind. I'm going to be talking about how I like to do things and how I teach things, but it may not be what you want to do. And if your method works, then that's awesome. All right, so talking about setting up a job, typically what we do is we put in, you can see 24-hour fitness, we put in a parent account, and generally it's already there, but you would put in a parent account. In this case, we never go to 24-hour fitness corporate. We've never been there. They could be in another state. We send them bills and they send us money, hopefully. But we do take care of a store. So you would put in a child account by right-clicking, entering a sub like that. You would put in a child account, and that is actually the correct term, a child account. You would put in a child account for that store. And then when you run service calls, that is what you pick when you create the work order. And when you do maintenance, you pick that store. But when that store wants an estimate on replacing a rooftop unit, and they say, go ahead with it, at that point, you would put in the job. So you would right-click on the store and put in a child of that store. And it would be a grandchild of corporate, wouldn't it? So you have a child and a grandchild. And those are the proper terms, but it's fine to say, level 1, level 2, level 3, or a sub of this or a sub of that. But it's okay to call them children. I point that out because somebody said, stop calling them grandchildren. That's silly. That's not what you say. And I told her, yeah, that's the proper term, but call it what you like. All right, so now that I put in that job, that's what I pick when I create any subsequent paperwork. So if I create a work order, a purchase order, that's what I'm picking. When I do an item receipt, that's what I'm picking. That's what you're picking forever. So every time you put in a timesheet, that's what you pick. Now, how would you remember that? Well, keep in mind, if you create a work order for that job and you come off the work order whenever possible, the software takes care of everything. When you create a timesheet from the work order in the desktop or the app, it automatically picks that. You don't have to worry about it. When you buy things and you come from, say, the estimate to create your purchase order, well, that job comes with it when you create the purchase order. When you create the item receipt from the purchase order, the job comes with it. So once you have picked that job somewhere, it will follow all the activity for that job, and you won't have to think about picking it. That's good news. The challenge with that could be that you get it wrong in the beginning, but it's easy to correct because in Total Office Manager, as you probably know, you can actually go change the job. You can create the job later and go pick it. The software doesn't mind. In most cases, that's not an issue at all. So it all starts with creating the job. Now, when do you create it? I would create, for example, let me back up and say this location said that they want a price on a rooftop unit. They need an estimate. What do I do? Well, I would create the estimate for that store. I wouldn't put in a job name. I'd create the estimate right here, or I could do it in mobile, but I would create the estimate right here for that store. And in the memo, I would type in replace rooftop unit number 17, southwest corner, whatever. So it was clear what we were doing. And then I would create my estimate. Now, if I'm really sure I'm going to get the job, I'm going to detail the estimate. I'm going to put a lot of detail in there. But if I'm not sure that I'm going to get the job, and we have a 35% closure rate, so there's only a 35% chance I'm going to make the sale, then I will create a simple estimate, assuming that I know how much I want to charge. I would create a detailed estimate only if I wasn't sure and I needed that paperwork to help me determine how much. But I personally, thinking that we have a 35% closure rate, I'm going to save myself a lot of time, 2 times out of 3, by not itemizing that estimate, or at least not getting too carried away with the details. But if this company nearly always says yes, then I'm going to create a detailed estimate. When they do say yes, and in fact, let me just do create estimate and open one up. I will tell them how much the estimate is for. And when they finally, let me resize this. When they finally say yes, then we're going to change the estimate status from in progress to awarded. And if they say no, I get a firm no, I'm going to select not awarded. So the estimate becomes awarded when we sell it. And when we get a firm no, we mark it as not awarded. That's actually pretty important because it helps you know that you've completely billed out that estimate. One of the monthly checks that you're going to do, and this is on our monthly checklist. We have a monthly, quarterly, 6-month, and 12-month checklist on the website if you want to download it. But one of the things that we want bookkeeping to do on a monthly basis is make sure that all the estimates have been marked properly. If they are awarded, that we have been creating invoices for them. Do we have any jobs we haven't billed for? One time I visited a company, we were on site, bad cash flow, money problems. We started digging for money. We found jobs that were never invoiced, never billed. We found down payments that we could have asked for that we didn't get for commercial work, and we found jobs that weren't even invoiced at all. So it was like finding money laying on the ground. At least it felt that way for me. It was pretty fun. So one thing you're doing is you're looking at your estimates to make sure that they've been marked properly, and then you are making sure that they have been invoiced, and you make sure that they've been completely invoiced, 100% invoiced. All right, so you create the estimate. Like I said, keep it simple if you like, if it's advantageous, and then once you make the sale, you would mark it as awarded. But here's the caveat. I would then create the job. So what I would do is I would click here and do Add New. And then I would add a new job, or I would do it on the customer job list. But either way, what you want to do, at least my recommendation typically, is you add the job only after it's been awarded. There's no sense putting it in there if you're not going to get the job. People often put in jobs for service calls. I wouldn't do that. There's no advantage. If you're trying to job cost a service call, there's better ways to know if you're profitable on a service call. So typically we would not create a job for a transaction such as a service call. Even a major repair that you can get done in a day, you probably wouldn't put in a job. But that's up to you. Just understand that by creating a job, you're creating more work for everybody. You're creating more opportunity to make a mistake, but you're creating a job costing report. And if the job costing report is a requirement to manage your company, you really need it, then by all means, create jobs. All right, so that's how it starts. You create a parent, and then you create a job underneath the parent. If it's commercial work, it might be a parent who pays the bills, and it might be all the commercial property. Could be rental properties, for example. And then under each rental property, you would add the apartment that you're working on. Like for a service call, you would add, let's say, XYZ Apartment Management Company, and then they have an apartment complex called the Bel Air. So now you have a parent and a child, and you're supposed to go out there and work on apartment 101, then you might put in 101 as a child, and that's what you would pick on your work order. If you ever did an install, then you could pick apartment 101, or if you wanted a job costing report, you could create a job underneath apartment 101. There is a help topic on all of these things that explain what I'm saying. Just go to aptora.com and go to the help system and see what you can find there that would be helpful. All right, so now that we have that job, we now know that's what we're picking whenever we are in the system working. Let me bring up an estimate rather than create one from scratch. I'll try to find one that's got some good info on it. What I would prefer you do is create the estimate, as I said. Oh, I happened to get one that was terrible. Create the estimate with great detail. If you need good job costing, you're going to have that detail. And then use that estimate to create your purchase orders. So let me have another stab at this. Let's find that estimate there. And from the estimate, I'll show you how we would create our purchase orders. All right, there we are. The reason why I'm resizing this, by the way, if you come to these webinars frequently, you've heard me say this already, but the reason why I have to resize this is I was on my desktop, and when I resized it for my desktop, it was a different monitor. So now that I'm connected to a small monitor, I have to resize it. And then when I go back to my office, if I were to open this program again, I'd have to resize it again because it's a different monitor, different resolution. All right, so here we have a fairly rich estimate, a lot of items and things on here. From here, you would first print a pick ticket. The pick ticket, which is a common term used in the inventory world, a pick ticket is for picking inventory items off your shelves. it allows you to see what you have in stock already. So the first thing we typically do when we have a warehouse is we print out a pick ticket. I'll preview one here for us. Now you have some control over what shows up on here. I just hit preview without thinking about options. But what I wanted to show you is the fact that it lists everything you need for the job. It shows you how many you need for the job, how many you have in stock, how many are on back order, how many you pulled. There's a place to write that in, and we did that on purpose. It's like, you got to write on that with a pen? Yeah, we did it on purpose, but you go through the warehouse and you mark how many you pulled. And then when you stage all of these items, and you still might have to order some, which I'll get into, but when you stage all these items, the job ticket becomes basically a packing slip. So the pick ticket, rather, becomes a packing slip. When you order from your supplier, incidentally, they print what they're referring to at that moment as a pick ticket. And then when you come pick everything up, they're giving you a packing slip, which is usually the same piece of paper, if not very similar. So here we have our pick ticket, and that is added to all the materials and equipment that we're staging for the installers to pick up. Now, obviously, you may not always have everything you need. So you're going to pick everything possible from inventory, and then you're going to order the rest. And how do we do that? We click Menu and go down to Create, and we create a purchase order. And it's coming off the screen to my other monitor. Let me see if I can show you that menu. All right, there it is, very bottom. What I wanted to show you is the fact that you have an option of a single purchase order or a per preferred vendor. As you may know, when you create an item and you add that item to the system, you have an opportunity to select which vendor you want to pick, and that's your preferred vendor. In this case, if I select single purchase order, it picks one work order for everything on the estimate. If I select per preferred vendor, it might create 2, 5, 10, 15, 20 purchase orders, one for each of my favorite places to get each item on the estimate. Which one do you pick? I recommend that you select a single purchase order. That way, the purchase order, let me just do it in fact, that way the purchase order pops up as a single PO, and then you can manage that, which might be creating additional purchase orders. Let's do the single PO. That pause there was it resaving the estimate to make sure it has the most current info, and then it opens up a purchase order with everything on the estimate, whether you need it or not. So you may not need some of these things. You might have had them in stock already. It might be labor. It brings over everything from the estimate, even labor. So what you would do is get rid of some of those things. Like, for example, on here, I've got a permit. What I do is I put my finger on the enter key, and that way when I click an X, I just hit enter. I click an X, I hit enter. New install service agreement, click it. Labor, click it. And that's how I get rid of what I don't want. Now you'll notice I have Daikin equipment on here. What I could do now is make a copy of the purchase order, and I will change the vendor to Daikin. And then I can send the rest of it to another supplier to get the rest of the material. This allows you to start with a single purchase order and clean it up. And then you can, from there, create copies. Just go to Menu, Create Copy, create copies to create a purchase order for all the different places that you might be doing business with. Now, what I typically do is I set up my own company as a preferred vendor. So we have Pro American Services Supply. And that's not a real vendor, that's your company. You would put in your company's name, supply, and you would set that up as the default vendor so it picked it automatically. What this allows you to do is consider yourself the first supplier to your company. You create a purchase order for your company, and then you pull everything from your own stock that's possible. and you remove those from the purchase order as you pull them. You can then create one or more purchase orders for everything that you need to get from your various suppliers using, again, that copy button. Wanted to show you a feature that's been in the software for many, many years, but a lot of people aren't aware of it. Click Menu. Let me move this form a little bit. Click Menu, and you'll notice Consolidate Items. What that does is that runs through your entire item list looking for duplicates. And if it finds a thermostat twice, maybe you need two. But if it finds the exact same thermostat twice, it combines that into one line item. So you have one line item for the thermostat, but a quantity of two. Now, why would you ever have the same thermostat twice? Maybe you wouldn't. Maybe there's other things. But typically it happens when you create an estimate for, say, the upstairs, an estimate for the downstairs, or an estimate with options, or two different rooftop units, whatever. You might want to organize your estimate so that they can see that part of it is for one part of the job, part of it is for another part of the job. And that might result in you putting BX cable, 100 feet of BX cable on there twice because you need it for job A and phase B. So consolidate items will make your purchase order a lot more supplier friendly. And that's how that feature all started, when a supplier said, we really like your software from what we can see of it. Can you do us a favor and not print POs with the same item down at the bottom that was at the very top? Because you can imagine them using the purchase order as their pick ticket. So they go through their warehouse and they pick a thermostat, and then they get all these other items picked only to find the same darn thermostat down at the bottom. So it was actually a supplier that asked us for that feature, and there it is. That was done years ago. Now you have an approved feature, as you may or may not know. You can have somebody get approval for this purchase order, so that way a manager can see it before the purchase order can be printed or emailed. People can be set up with that permission. As you, again, probably know, I think some of this is new to some, and many of you have been doing all this for a while. Once this PO has been created, the next step is to receive the items into inventory. But I want to say one last thing about the PO. I mentioned it's super important. Remember, a purchase order is the agreement between my company and my supplier. This is where the two of us agree on what to buy, how many, how much we're willing to pay, what the financial terms are that we've agreed to, and the delivery schedule, and delivering to where. All of those things and more are on the purchase order. So it's really important to create the purchase order. In a larger company, the person creating the purchase order may not have anything to do with the person who's entering the items into inventory. And if a mistake is not corrected on the purchase order, that mistake might get carried through the entire system. So it's really important that we have a good, accurate PO, and if any mistakes were made, if anything changes, that the PO gets updated. All right, enough on POs. Let's talk about the item reservation feature. In the old days, before software, and I started in those old days, there were actually computers back then, but they weren't very prominent, and we weren't really using them for anything but accounting. But in the old days, when we sold a piece of equipment, we typically wrote our names on a piece of paper and taped it to the box. So like if I sold something over the phone, I would type James sold, and I would go out to the warehouse and put a piece of paper on that box. And that meant that when you went out and tried to put your piece of paper on that box, you realized it was already sold. Or maybe you said to the caller, let me go look and see if I have any. And you do have one, but it's got my piece of paper on it, sold. That's how we knew. Well, our software does the same thing. It allows you to see how many items you have in stock, but that means that you haven't sold it. What if you've promised it? That's when the item reservation feature comes in handy. If we go to customers and go to lists, the way that is a feature that you turn on in preferences. So if you haven't seen it, you may not need it. But if you want it, then you turn it on in preferences. Otherwise, we just hide it so it's one less thing for you to worry about. How does it work? Well, we can come from other places to get to item reservations. And that's one reason why I think I had to think about it, because typically I'm not coming here to do my item reservation. I'm typically coming from another form to do an item reservation. As I've said before, it's always best to create an estimate when we're talking about jobs. And then once that gets sold, you might come from the estimate to create your work orders, come from the estimate to create your purchase orders, etc. When you come from something, then it's usually a lot easier on you. Let's just do a new item reservation just to see the process real quick. Not much to it. You're simply picking the job, and you're picking a department if it doesn't select one for you, if you don't have a default for that customer or that job. And I'll pick commercial, we'll call it design build. And then you're picking the warehouse that the item is in. You're putting in a memo. Always put in a memo of some kind. Let the entry number remain the same. You probably don't need to change it, but you could. And then you're picking the item. Now, you're going to only see tangible items in here. You're only going to see inventory parts and serialized. That's all you'll see. If you pick something that you don't have in stock, then it's going to tell you. It's going to say we don't have those in stock. But that's all you have to do to reserve that item for that particular job. Now, when you're creating your invoice, you can go to your item reservations from the invoice, pick it, bring it over to the invoice. If you forget to do that, but you've picked the right equipment, you've already put the right equipment on there for some reason, you've already got it on there, and you forget about the item reservation, well, you're going to need to go clean those up. So on a regular basis, someone within your company needs to look at item reservations and take care of any that are illegit. But just because you have it on reserve doesn't mean that you have to use it, and it doesn't mean that you can't take it out of that reservation. Where it's really handy is when you have promised a piece of equipment and you don't want someone selling it. When they go to create an invoice, they will see that reserved item, but they won't be able to pick it. They will know that it's physically in stock, but they won't be able to pick it. The other advantage is with serialized equipment, you might need to promise a certain serial number. So you've ordered a piece of equipment for a certain job, and you want to make sure that serial number and not any other serial number goes to that job. Otherwise, if we have, say, 3 condensing units in stock, I might grab the condensing unit for my job that you thought you were going to use on your job. And it might be that you've already invoiced for it, or it might have special characteristics. That's why you would use it. If you're struggling for a use case, don't bother. You probably have other priorities in the software to get used to, but that's the idea. Now, you probably have already done this, but when you create a purchase order, you've noticed that items, when you come from an estimate and you create a purchase order, or you select a job in the purchase order, which is automatically selected when you create the purchase order from the estimate, there's a reimbursables checkbox that gets checked. What that is a reminder system. That's a reminder system in the software to add that to an invoice. It might as well have said invoiceable if that were a word, but we chose reimbursable because that was in the dictionary and invoiceable wasn't. Maybe we need to invent our own word. So you create the purchase order. When it has a job on it, it automatically checks the box reimbursable. And what does that do for you? Well, when you go to create your invoice, and you would never do it like this, you want to come from an estimate or come from a work order, but let me just do it like this for us, for brevity. I'll pick my customer. If I'm not sure what to put on this invoice, then I would go to reimbursables and let the software tell me what it knows. This form will pop up giving me a list of items that have been purchased for this job. And then I would just pick those by checking the box and click add. Now, if you don't need them, you can select the hide option and you will remove them from this list. It's important to remember this list is not attached to your accounting directly. If you don't use those items, it doesn't affect your accounting, except for the fact that if you were supposed to put them on your invoice and didn't, that affects your accounting. But the form itself doesn't. It's just a reminder system. So if you go back and open up a reimbursables form and find a bunch of things that you should not invoice for because you already have and the reminder is invalid, it's just like a telephone call reminder. You know, you have on your desk a message to call someone, but you've already called them. You can throw it in the trash. How do you throw it in the trash? You just simply open that form and select the hide button and hit save and close, and they go away. There's also reports that allow you to see more details about what is considered reimbursable in the software. Again, if you're creating timesheets from the work order and you're selecting a job everywhere, and remember it selects it for you automatically, then you are doing job costing without knowing it. Create your purchase order from a work order, it's got the job name. Create a timesheet from anything, it's got the job name. That happens automatically, and so all spending activity is associated with a job. Job costing is automatic. It's just a product of normal everyday bookkeeping. Now let's talk about what reports are available to you. If you go up here to reports and go to contacts and jobs, you can see the various job-related reports we have here. Now technically, you could consider almost all of these some kind of job costing report because it's telling you a little bit about what you spent on the job. But really, the go-to reports for most companies are the job costing overview and the job estimated versus actual summary or detailed. Let's open up the job costing overview. Normally, we would pick a certain job, and there's one picked for me. Let's just preview it and see if I get lucky and there's good data there. All right. Well, I can't say it's great data, but we'll use it. When we come to this job costing overview report, we're going to be presented with alerts and warnings, such as how many purchase orders are opened, meaning we created a purchase order, but we haven't shown the software that we received those items. Also, it's going to tell us how many items are reimbursable. So in other words, we've ordered them. We may or may not have received them, but we haven't been reimbursed for them, meaning we haven't put them on an invoice according to the software. It'll tell me how many items are opened, so purchase orders that are open, but how many items are opened. It'll also tell me how many timesheet hours we have so far and how many timesheet hours were budgeted for the job. And how would it know that? It's looking at the estimate, of course. It looks at the estimate to see how much labor you put on the estimate, and that's where that number comes from. It then totals up all of the income from that estimate or estimates. It looks at change orders if you had any. It lists your labor costs, your equipment, parts and materials, etc. If you see some zeros in here, but you're sure you spent the money, then we have a setup issue, maybe in chart of accounts, maybe within the item itself, but we can usually get that corrected really quickly. What I really wanted to point out was the extra labor burden that you can add to the software, and also the extra overhead. When you create a job, you have the opportunity to go to the job info tab and add a percentage or a dollar amount, but it's typically a percentage for overhead. So you might determine that commercial design build has overhead of 28%. You could put that on the job setup and it would allocate that much overhead to this job. Now, it doesn't change your accounting, of course. It just gives you the ability to allocate overhead to the job to give you an idea of what your net profit would be if you were allocating all of that by hand manually, which you wouldn't do. If you decide that this report doesn't look good, then you want to drill down on it for details. So you might look at the timesheet hours, double click on that. You can double click on any of the money and get other reports. But let's say that that is not enough. You're still not happy with that job. Then typically the go-to report is jobs, the job estimated versus actual summary or detailed. And this is one of my favorite reports. This tells me what went wrong with that job. So I'm just going to hit preview, see what we got here.
We have a question.
Got a question? Okay, I'll grab that in just a second. Let me just finish my point on this and I'm going to get a question. This report is nice because it shows you where the job went right or went wrong. If the job is too profitable to be believed or the losses are scary, this is the report to go to because it will show you everything that you thought you needed for the job. And it's looking at the estimate. It looks at the estimate and finds the estimated cost of the part number, the estimated quantity, the actual cost, the actual quantity, the difference, how much you anticipated spending on it. And there's my 1 hour reminder so I don't just talk for 2 hours and go, where did the time go? It shows you the estimated revenue on an item basis, the actual revenue, and the difference. Typically, as I mentioned earlier, we're going to do okay on the parts. We're going to do almost perfectly, if not perfectly, on the serialized. It's the labor, the services that we typically estimate incorrectly. And there's a lesson to be learned from those. We want to examine those and find out what went wrong. If we don't have a lot of detail, then what you would do is consider breaking out your labor and further than you do now. We have one line item for labor. Consider having, say, 5 line items: ordering and picking up equipment, tearing out, setting up, finishing up, startup, etc. So the more you break out your labor, the more useful this report will get for you. Okay, Will, you had a question.
Yeah. So Tina says, we do not bill percent complete. We are a unit price billing. We struggle with this in the over/unders. Technically, we will never be over or under as we bill only for what is installed. As the report uses the estimate to calculate, what is your recommendation for handling this?
So the question was briefly, they don't use percentage of completion. They really bill out for what they have done rather than a percent of what they've done. So as I understand the question, rather than say bill you arbitrarily 25% of the job, they would bill you for the parts that they actually did, they've completed. And the process really is just the same. You would go to your estimate and create an invoice probably for the entire estimate. And now you're staring at the invoice and you change the quantity to 0 or the appropriate number for everything that you want to invoice them for. You wouldn't want to remove those line items. So let's say that you were going to have eventually 10 different widgets that you're going to invoice them for, and you have labor components. Well, you have to make sure that you're sufficiently detailed in your estimate, but you would create the invoice and get rid of the things that you are not invoicing them for, including labor. So get rid of all of the items, Hopefully they're group items for a large company like yours. You'll have group items, but either way, you just want to pretend like you're creating this invoice with a paper and pen. If they say, hey, invoice me whenever you get XYZ done and we'll pay you, what would you do with paper? You'd create the invoice, you'd get the invoice, and you would write on there that we did A, D, F, and G, and send them that. But how do you track what's left? It's easy because everything was on the estimate. When you create the invoice, you're just zeroing out what you don't want to be in that invoice, and the next time around, you're repeating the same process. And then eventually, you'll have something left over, and you want to keep your eye on that. That's very important. You want to go to your list, filter by estimate, filter by awarded, and also keep an eye on the invoices. But you want to make sure that you get everyone billed out. So I hope that answers your question. Were there any other?
Nope.
Okay. All right. Now, let's talk about another report. So I mentioned there's reports in here that are specific to job costing, and there's lots of reports where you can pick a job, and that could be useful, such as payroll reports, etc. There are custom data views that you might find helpful. And I was in here fine-tuning a custom data view for a client not long ago, and it made me think to show this to you, otherwise I might have forgot. So again, how did I get to custom data views? I went to reports, custom data views. If you're not aware of this, it's a fantastic feature. When you first open it, you might want to click here and go to download update views. And this little form will pop up, and it'll show you any custom data views that are available that you don't have, and it'll show you those that maybe you have, but there's an update. Don't worry about updating and overwriting something that you already have. It won't be a problem. All right, famous last words, right? No, it shouldn't be a problem. So be sure you download those. Now, when you download them, you still may not be able to get to them. You might click this and notice that it's there, but you can't click the cash flow, for example. If that's the case, then you don't have permission for it. You have to set permissions separately. If you've never set the permission before for a report, you're going to have to give yourself or others permission. The reason why we do that is I might let you update this, but I don't want to give you permission to see the bills detail or the cash flow statement. Okay, so come down here looking for job costing related reports, and one you might like is the estimate over under details. When you click that, the list will populate with data that we've programmed into the software. So you didn't have any control over this. It populated it automatically. I am using a filter. You'll notice I have a user filter right here. I'm using that filter to filter out the results. Otherwise, I could click show all or click some other filter. And I have these records in here because of that filter. I can also add or subtract columns to this data set if I want to. I can rearrange the columns, and I can change the sorting, which is very important. I'll show you why in a minute. I can change how this is sorted. And once I do that, when I come back into this form, it will remember those things. Now from here, you might right-click and put this into Excel and do something with it, but this is what I wanted to show you. If you go to Reports and go to Setup, you will see a report in here called Over Under, and I have a new one right there that I was working on for a client. I called it Option A, and I'm going to click Edit, and I'll bring it over. All right, so this is the over-under report, but technically speaking, it's really a schedule up position, as it's called. Call it anything you want, but it's called schedule a position for completed and uncompleted contracts. How did I build it? Well, I just drug labels onto the report, and I drug these fields onto the report, and blah, 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 and there it is. So let's take a look at it. I have the company name at the top, the report title here, my headers, just like Excel. But here's what's really cool about this report. I don't know how well you can see it, so I'm going to magnify it, which means you won't see all of it. But I want you to be able to clearly see the value of this. It shows you the original contract amount, and then it shows you the revised contract amount. And if those are different, then you know there were change orders. It shows you what the estimated cost for the job is. That's payroll, equipment, materials, supplies, everything based on the estimate that you created. It then shows you how much it has cost your company to date. So far, how much have you spent on the job? And then, doing a little bit of math, we show you how much it will cost to complete the job. So if I scroll down, I can see, well, here's one that we have $200,000 to complete it. That's a big number. It's going to cost me $200,000 to complete it. Well, that's a lot of money. It's worth paying attention to. But it also shows you what jobs are just out there that are outstanding. This might surprise you because you might look at a job and say, I thought we invoiced for that old job. We did that months ago. Why is it on this report? And you can deal with it. It'll then show you how much was billed to date or invoiced. So now I know how much I've billed out to date and how much it's going to cost me to finish it. And then I can see my over-under, and that's kind of how it got the name. I can see my revenue earned to date, and am I over or am I under? What's my estimated gross profit for the job? Again, what I really like about this report, it does a lot of things, but this report shows me how much money I think is coming in. So let's make the math easy. The report says I still have 1,000 coming in, but the report might show that I have 1,100 going out to finish it. That's negative cash flow. That's okay, I can handle the $100, but what if it was 100,000, 10 million, whatever number's big for you? That indicates how much money you've got coming in, but also how much money you have coming out to finish the work. If you go back and make revisions and keep your bookkeeping updated, putting in additional information as needed, then this report is even more valuable with regard to indicating how much money you're going to have to spend to finish it. So that is a really nice report. And again, you might think, I would have done that differently, and that's totally fine. That's why the feature is nice, because you can change any of this. Now, one thing I put down at the bottom is something that you might want to put on reports that you're custom making. I made sure that we copyright the report so people know this is copywritten, they know the company, all rights reserved. And then I put a confidentiality statement that should go on all of your sensitive documentation, saying that it's for internal use only. Only a manager of a certain level should have access to it, C-level, department level, etc. That's the nice thing about designing your own reports. All right, so that's it. That's how you build these reports. And, you know, I've had people say to me, hey, building these is not easy. And I realize many of these aren't that easy, but after you've built a couple, they're a lot easier. And, you know, there are companies, big companies, generally not us, but big companies that have full-time report writers. You know, there's companies that hire people to write reports. That's all they do for a living. So it never gets super easy to make a complicated report, but this should be easy enough for most of your needs. Now, one other piece of advice I have is when you do create a report, unless it's you using it and no one else, then be sure to put in a little bit of information about what the report is delivering, what is its purpose, and also, and this is the important part, any notes about options, preferences, settings, things like that. Like, for example, we discovered recently, and maybe you're out there watching this, I was working with a client and the report didn't make sense. Not this one, it was a different one. The report didn't make sense and I couldn't figure it out at first, and we realized, wow, we had mobile invoices that hadn't been converted. And until the mobile invoice got converted, the report wasn't complete. So we put a note in there to make sure that you don't have any mobile invoices for the date range that you're using. So it's handy to put in notes like that in there. Now, one last thing, if you're new to it, you can do a save as, give it a new name, change it around. But you should find a template like this one in there that you can already start with. And there's lots of reports like that in there already. I'll show you one more. Let's go down to invoice. I'm trying to remember which one that was. Invoice details, I think. Yeah, invoice item details. All right, so we'll select that, and the delay is it loading, and I didn't think about applying a filter because it could be loading 100,000 records. That could take a minute. But when you select one, this is why we call it a custom data view. When you select one, it's loading the grid with data. And what you do with it is up to you. You might just look it over. Yeah, that was 26,000 records. You might just look it over, but then you might want to make a report on it. This has a lot of columns, most of which you may not need. And that's one reason why it was slow. But let's just talk about what we would do with it. Let's click, click that filter, get that down to 561 records. We'll go to reports, go to setup, and we'll pick, I can't remember which one I modified. I guess it doesn't matter. I'll click that. All right, so here's an example of what you can build. Customers without an active service agreement, for example. So it's really easy to make reports and make job costing related reports and others. The one I was actually looking for, and I may be in the wrong company, sample company file, but we built a report to show how many hours the technician had invoiced and how many hours we paid them per job. And that was really helpful. That way we could just look at all the techs and see, well, they billed out 10 hours, we paid them 11. That's pretty damn good. We paid 15, they billed out 6. That wasn't good at all, and that was fairly typical when we got done with that report. So just keep that in mind. It's a good report for those of you that want to build one and you didn't find what you were looking for in here. As I said earlier, the key to job costing is making sure that there's a job, a customer, selected everywhere. The software is very forgiving if you forgot to pick a customer. So don't forget, you can always go back to your bills and so forth and pick customers, pick jobs, and update things if it's practical. The most common issue that I see on job costing is, besides just quick little setup problems that are easy to fix, going into preferences, going into chart of accounts, etc., it is lack of inventory tracking. So when people say to me, we can't get a decent job costing report, it typically comes down to, if it's not simple settings, it just comes down to how well are you tracking inventory. And, you know, if your balance sheet shows that you have $200,000 in inventory, and we were to go count it and find out that you had, say, 100,000 or 500,000, then all of your reports are off by that amount. So again, to give you an example, let's say that your balance sheet shows that you have 100,000 in inventory, but you really have 200,000. Well, that's a $100,000 difference. Where does that difference go? It goes to your reports. So all of your reports are off by 100 grand somewhere. Depends on where, the date range, etc. But you probably see my point. If your inventory in reality is not the same as your reports, then your job costing is going to be flawed. So you want to focus on the timesheet entries and get those perfect, and then introduce the tracking of equipment, then parts and material. All right, one more thing I want to show you is, let's say that we are looking at a customer record. And we have a question on the job info tab. So James mentioned this job info tab, never heard of it, never seen it, don't know what to do with it. Wish I remembered what he said. What do you do? Well, you click menu and down at the bottom there's help. Click it. Or you push F1 on your keyboard and make sure your function key is activated, because mine isn't by default. I'll push F1. All right, so what'll happen is a topic will come up for that. And you can see that this is for the job, the customer job form. There's the job info tab being explained. And then here comes all the details, what everything means. And then you have related here, down here. So let's say that you want to learn about job costing. You might just type in job cost and see what it brings up. Reviewing estimates for job costing analysis. All right, I like that. Steps explained, I like that too. What else? Job costing concepts explained, sure. Job costing report discrepancies. That's a good one. Job costing overview report, job estimates versus actual, and it goes on. So let's just click on one of them, how to analyze estimates for job costing. And it just covers how to do that, how to go through your estimates, make sure they're correct, make sure that you didn't miss something for job costing purposes. Job costing basics. You're new to job costing, this is the place to start. What is it? How does it work? Step by step, create your job. Additional overhead field. Remember that? I mentioned that, but didn't explain it. There it is. And it just goes on and on and on. And then job costing concepts. So that's more details. And then, oh, and here's the job layout. So maybe TGI Fridays corporate, then you have store 102, then you have a job. You can even have a phase of a job, phase 1, phase 2 of that job. So that's explained. And then finally, like progress invoicing, you could type in something like estimate, best practices for using estimates in contracting. All right, so this talks about how to create estimates for job costing purposes, also for billing purposes, types of estimates, flat rate pricing, time materials, hybrid, big jobs, bidding jobs. And as I scroll, you can just see, it's pretty thorough. And then there's stuff down here like AIA payments, how to do it, what's AIA. So that it's really good. There are something like 800 or 900 pages. I don't mean pages printed. I just mean URLs. There's like 800 or 900 of these in our website. So it's just a ton of info, not to mention all the videos and everything else. So check those out if you get a chance. Also, if you don't have our user manual, I can't reach it. I'm looking at it right there. It's big, thick. If you don't, hey, oh, well, let me get it. I'm going to leave the camera and go get it. So if you don't have our user manual, we can always send you a link to it. But the reason why I point this out is who makes a manual anymore? I mean, who writes a manual? And it's big. I mean, it's got a lot of pages. I lost my screen again. It's got lots of pages, pictures, images, and all that. Frequently asked questions. I mean, it's a work of art. I wonder how many people use it, because when I was updating it, and I did it myself recently, I didn't write the original, but about 14 months ago, I spent weeks updating it. And I kept thinking, and I obsessed over it, because I kept thinking, how much time am I wasting? Is anybody going to read this? So if anyone ever said to me, I love the manual, that's all I need, just like one person to say, that thing really benefited us. But I think it's nice to have a manual once in a while. Pretty much everything in the manual is on the internet and way more. But sometimes it's nice to have a manual to open up and figure out how to set up payroll or something like that.
Christy says that she uses it often.
Christy uses it often. Awesome. See, thank you, Christy. That's all I needed to hear.
And Huffman Heating.
Oh, good.
Yeah.
Another one. Thank you. I do appreciate it, because I really did update it myself. And I mean, not my company. I mean, my fingers updated that thing, and it was a ton of work. but I loved it. I also have an FAQ I've been working on, by the way, and I'm going to post it on Pros on Facebook, our page. I'm going to post it, but it's like, gosh, it's up to like 250 pages of FAQ. Every time I get a question that's not in there, I put it in there and I answer it. And some people I say, that's a good question. Like when I'm coaching with people, I'll say, that's a good question. Do you mind if I answer it in writing? Because I know someone's going to ask that. And then I do, and I just add it to our collection. So I'll post that. And also, speaking of posting, if you want it, I can give you this document. Nothing great. I mean, I typed it up for our session today. But if you want that, I can always email that to everybody that signed up. Any other questions? I'm asking my teammates. All right, we're good. Hey, thanks for signing up and being here. As always, I enjoy doing these. We do them every month, unless I drop dead or something like that. I don't think I've missed one of these in a long, long time. So I enjoy doing them. On behalf of Will and Alicia behind the camera and everybody here at Aptora, we want to thank you for being our customer. And I will look forward to seeing you in the next webinar or before. I'm James Leichter, president of Aptora, and I wish you a great afternoon. Thank you.